Hi, this is the first page of the Momentum Monitor. What it shows is medium and long-term trends. These numbers here are the weeks. So last week was the 34th week. The way to read it is, for example, the MSCI World last week, as of last Friday, was in the 7th week of a bull market, and the long-term trend, it was the 54th week, and the 50-day moving average has been moving up, and there's no change to this. So one aspect of this momentum monitor is to show persistence, and the quick reader will obviously look for these dots. The dots mark the changes. Red dot is a negative change, and the green dot is a positive change. In this particular week, there were extremely few changes, which means these orange boxes are sort of like more important statements. So with respect to equities and bonds, the bull market in equities is intact, and the bear market in bonds is intact too. Other aspects of this particular momentum monitor, emerging markets, there was a lot of volatility last week, and having produced this momentum monitor over the past couple of months, emerging markets have been negative for ages, or for many months. So in this particular case, the MSCI emerging markets for 14 weeks. And in this issue, I added a couple of emerging market currencies. Here also the trend has been negative. I think I understand the momentum monitor as let's say, a technical supplement to the more fundamental update. So for example, if we look at a model of emerging markets, which is in today's flash update being just a couple of slides, whereas the main update being 40 to 50 pages roughly every 10 days or 2 weeks. What this graph shows is a model with economic variables, including surveys as well as hard data. I typically look for this moving average. For example, in emerging markets, this has been pointing down for a couple of months. Also, these gray area show the negative surprises. So it's not only bad. The news is not only bad, it's also these surveys and industrial data are also below what analysts have been expecting. This is a table showing changes of 12-month forward earnings. This is a 1 month change, and then 3, 6, 12-month changes. The various regions, it all has been negative, which means this slide is very much consistent with the momentum monitor with this part. Gold or commodities have been red for a long time, but now you see some positive. Let's say last week, according to this, the medium term has changed and is now positive. This is the second page of the momentum monitor. Typically, I have a summary comment in orange. In this particular case, it's a statement that these two tables have turned greener and greener over the past 6 weeks, and that this has stopped. This gray section typically has some reasonably standardized text. So, for example, the risk is on, just by observing the number of green trends or positive trends. 90 of the 113 50-day moving averages were rising, which compares to 92 last week, which means more moving averages are rising, but the change of the change is very slightly negative, which means there are now more, or actually less, moving averages rising. The graph over here shows just the performance in US dollars since the beginning of the year. I typically change the date of this graph. Again, the same idea is to watch, for the quick reader to look at these dots. Now, in this particular week, there were extremely few changes. One comment perhaps here is that all the negative changes were in the less cyclical sectors. This is the third page of the momentum monitor. This page actually doesn't show price, it shows earnings. It's in this particular case it's expected earnings, which are from Bloomberg. These are consensus aggregate earnings from analysts looking 12 months into the future. The same idea, a medium trend and a long-term trend. MSCI World earnings have changed for the better 12 weeks ago on a medium term basis, and 29 weeks ago on a long-term basis. Europe is red, as one would expect, and emerging market as well. Here, these two boxes indicate which indexes or which markets are at a, let's say, a 10-year high. So, for example, the US earnings are within 2% of the 10-year high, which in many cases I would argue is also the all-time high. Denmark, Germany, Norway, and some of these green markets, the same is true in some of the sectors as well. The opposite is again the low part. So, for example, Brazil, Greece, the earnings are within 25% of the lows. This is a graph showing just the changes over 3 months. I also change this date occasionally. On the lower part here, this green dot could be misleading. So, for example, if you look at the graph of this particular sector, banks in Europe, it has been quite flat, and so we probably have a change in the second or third decimal, which means this table is obviously not the holy grail. It needs to be taken with a pinch of salt. It's only as good as the data is. In this particular week, earnings momentum has been rising, just by comparing the number of green dots with the red. So there were 12 positive changes versus 3 negative changes, with about half of the 50-day moving averages moving up. I think this momentum monitor is not only relevant to look at absolute changes, but also relative changes. I'll give you 2 examples. One is, let's say, the material sector. Earnings have been horrid for many weeks, and this, if we go back to this performance chart, obviously this is manifested in the performance. So someone looking within a region at sectors, materials, and also energy were not the places to be, whereas consumer discretionary and, for example, consumer staples were sectors, and this is manifested in these sectors outperforming the let's say the materials sector. Another example is what I've been highlighting is let's say the Germany and France. The intuition is probably that Germany does better than France, perhaps manifested through the earnings, the long-term change. But a couple of weeks ago, Germany has actually peaked, whereas the momentum in France is positive. In the updates, I've been showing this graph for a couple of months. It shows the relative performance of the DAX. The price in DAX K is the price index of the DAX being a total return index versus the CAC 40. This has reached a 20-year extreme a couple of months ago, and now there's mean reversion, which means the CAC is outperforming the DAX, irrespective whether this is intuitive or not. These are simply stating the facts, and this graph, the point is that this graph is very much consistent with this being sort of like looking at earnings momentum, and this particular graph looking at the price change, and this is also in today's flash update. It shows our France model, this red moving average, which is sort of like top-down factors, whereas the earnings momentum is obviously bottom-up factors, but the two are consistent. And this is just an example. This is I think, helpful for an absolute assessment of France, but also relative to other markets. Everything seems to be consistent. Let's say if we compare Germany with France, one being toppish, Germany, France having been hammered and now sort of like showing signs of well, life essentially. This is again a table of 12-month forward earnings. They're positive. They're actually negative in Germany, which is not shown here. This is a graph of these aggregate consensus earnings, and you can see they're quite low. Germany is obviously at a high. This is the fourth page of the momentum monitor. Here I compare or I analyze these signals, medium term and long term. The way to read this is the MSCI World. The momentum signal was 7 weeks ago, which was the 5th of July. The price then was 14.58. The most recent price is 15.08. This is a 3%, 3.5% change, and because it's green, which means the trend is positive, the P&L, or let's say a hypothetical um, P&L in a world of no transaction costs and no slippage is 3.5%. In bonds, it's obviously the other way around. The sell signal or the negative signal was on the 10th of May. That's 15 weeks ago. The price 158 and now 140. And that's a negative return of 11.4. And because it's negative, the P&L would be positive. This graph just takes an average among asset classes, equities, bonds, commodities, and FX for the medium term. So for essentially these two tables, and equivalent on the right hand side for the more long term momentum. That's it. Thank you very much for your attention. Bye.